reason why Ambien isn't always the best choice. Talking in your sleep with romantics there. Good morning. It's 8:42. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time. Check in on Wall Street and see what it's doing for you this morning. And pretty much all week long, it's been for you instead of to you, which Philip Statler and I are having some difficulty explaining because things are okay, but they're not coming up all that many roses. Philip's on the phone right now. How are you this morning, sir?
Hey, I'm doing well. It's been a good week on Wall Street. We've hit new record highs, which is incredible to think about when you think of where we were, 4, 5, 6 weeks ago, that we've been able to come back that quickly in the marketplace. I think is incredible.
It really is. And yeah, incredible is a good way to put it because neither one of us can figure out why everybody's so doggone happy, but it is working. Yesterday, Dow was up another 0.25%, up 115 points. S&P 500, another new record. We're now starting this morning out at 7,041 after gaining 18 points yesterday. NASDAQ, another closing record, up 87 yesterday, so we start the morning at 24,102. And I did a little bit of math. The Russell is not at a record, but it gained 0.22% yesterday. It's only 16 points away from its all-time record. And the Dow, well, it's lagging behind the others, but 1,900 points from its all-time record, given the amount of numbers that a Dow change can make in a day. That's not out of the range of reason as well. In 2-3 days, they can make up that kind of number. So, I mean, there's no way to term what we're at as anything other than nosebleed territory on the indexes right now.
Oh, that's right, Dave. And, it's all on anticipation of the whole war being over, if you call it a war, and so we'll see how that plays out. I mean, we still got some time. It's not a done deal, and so it just takes one little hiccup to see these things reverse back down. That
always needs to be reminded that it doesn't take much, like a quick uptick in the price of oil or Netanyahu not talking to Lebanon anymore. That really was the solid good news on the Iran war front, that they got Bibi Netanyahu from Israel talking to the president of Lebanon and negotiating a ceasefire with Hezbollah. And that actually is the first really solid, concrete, okay, can't argue with it, good news item that we've had out of there. Everything else has pretty much been static as is. We're still blocking Iranian ports. I do have news this morning that Great Britain and France are working together to try to do a police action to reopen the Straits of Hormuz. So they're actually now finally kicking into the game, and they're keeping the USA at arm's length out of this so that they get plausible deniability that they aren't in cahoots with us and hacking off all the weirdos out in Iran and its various militias, which probably isn't a bad decision on their part, but now we're getting some NATO allies involved in this. So really, the hard news that's coming out of it is actually giving the market reason to be semi-happy this morning. And that's the first time all week we've been able to say, okay, fine, something happened. It is good news. Actually can understand why we traded up for a day.
Yeah, it is. It is. I want to switch directions just a little bit, Dave. We didn't talk about this ahead of time, but I was listening to a podcast from somebody that I respect very well. And they made it interesting. You and I talk about AI a lot on this show. Mm-hmm. And we talk about how the anticipation is the loss of jobs because of AI. And that's what all these companies keep touting, right? And he quoted a Fed study that showed, it had like 1 million data points that showed that absolutely was not the case.
Really?
That no jobs have been lost, absolutely zero, because of AI. Companies are using that because the market likes it. They like what that sounds like. And their stock jumps when you talk about AI taking jobs. However, they were saying that it's because they're having some financial issues and they don't want to. That's why they're letting people go, not because of AI. I found that very interesting as I was listening to that the podcast yesterday.
So basically, they're making Jensen Huang and the bunch of the AI goons in the high tech the scapegoat for employment decisions they'd make, even if we hadn't ever heard of AI.
Exactly, and getting rewarded because of it.
Jeez. You know, it's always occurred to me, and this has happened every time there's been a major technological sea change, that yes, there's certainly some compression or at least downward pressure in terms of employment in the jobs that whatever that technological advancement is likely to replace, but it has a tendency to be replaced by specialist jobs maintaining and developing the new technology. And I've always figured, you know, there's got to be somebody to mop up all the server farms they're building. So it isn't always the high-tech retrained ones either, right?
No, that's right. So I just thought that was interesting. I want to throw that out because you and I talk about jobs and AI and that, and there's not much in the economic world to talk about today. So thought that was an interesting little tidbit to talk about.
Absolutely is. It kind of confirms. It's good to hear it coming from somebody that actually has a better finger on it than we do in Sebring, Florida. While we're talking about macro stuff down the line, you mentioned yesterday a bunch of Fed governors hit the rubber chicken circuit over the last 24, 48 hours, and the New York Fed's Williams, I don't think I've ever heard anybody talk out of both sides of their mouth this well at once. He was on the rubber chicken circuit yesterday saying, warning that the Iran war could boost inflation and hurt growth. And then out of the other side of his mouth, he says he expects inflation will be tamed to 2% by next year. Not sure I understand how he can say both those things at the same time. Can you?
No, I can't, Dave. That's, but hey, leave it to the New York Fed governor, right?
Oh, Lordy. Yeah, there is a hint of politics in all of those guys. Other tidbits just out there this morning, you got to figure that something shifts in the market when things go, completely haywire, like getting into a war. The companies that are getting hurt as much as anything, the high-end luxury goods stuff, Louis Vuitton, Gucci, Hermes, their luxury sales, they're reporting declines as the war has hit Middle Eastern demand. The rich guys over in the Arab countries aren't buying as many fancy purses. Okay, I can deal with that.
They got their eyes on other things right now.
Yeah, there's some pressure on something anyway. Like you said, there's absolutely nothing in terms of government data dump today, but we got some headline news as far as companies reported. Not only did Netflix report, but they announced that one of their head honchos was leaving the company, I gather, huh?
Yeah, let's look at Netflix for a minute because Netflix really had an okay quarter for the last quarter, right? The last quarter, hindsight, they did well. They beat on earnings, beat on revenue. Earnings number doesn't really jive when you look at everything that gets taken in and out, so they don't have that number here. But I know that I saw that their revenue was up over 10% from where it was last quarter, or not last quarter, but the same quarter last year, actually 16% higher than where it was. Good. Yeah, so good news there. But here's what's beating up Netflix today. It's this quarter. This quarter, they came out and said, look, earnings are going to be about 76 cents a share. That's way off what the expectations were for this quarter, like 84 cents a share. So that has Netflix dropping like almost 10% this morning.
Ouch! What? Yeah. Why did they say that they're showing a decline from expectations like that?
They did not really dive into why that was there. Just that they really lowered their expectations for this quarter.
Intriguing. I wonder if that might be kind of the shakeout from all the bundling that's happening. I mean, Hulu is going to fold into Disney Plus, so that's going to be a combination full subscription and cable substitute service on the streaming side. We know that they took a hike on the Warner Brothers deal, so now that's over in the Paramount family. I'm wondering if they're just seeing an increase in competition in that service class all the way together.
It could be. They sure as heck raised prices, though. I saw that in my.
Yeah.
bank account this last month. Like, really? That's yeah.
Well, I'm glad they're doing well, all of you people that pay Netflix. I do not, so I'll pass on it. Anything else you see out there from the reporting companies?
We do. We've got some Alcoa reported. However, they missed by about 9 cents a share, came in at $1.40 instead of $1.49, missed on revenue as well. Alcoa is trading down a little over 2% this morning. Trying to see what else we've got here. Ally Financial reported, the bank, online banking company. They had a good quarter. They beat on earnings substantially, came in at $1.11 versus 93 cents a share. Revenue did miss slightly, but they're trading up 4.6% this morning.
That's good. Any financial that's going up after the guidance issues that we had off of some of the big ones is good news. I'd seen on my list that Truist was supposed to report today, but I gather they're going to do it later on in the day because I don't see them on my list of things that have come out this morning yet.
Yeah, it must be. No, I don't see them anywhere either. But I'll tell you, we talk about software stocks here a lot lately. All of them are getting a big rebound for the week. Salesforce up almost 3.3% for the week. Adobe up 2 3/4. ServiceNow up 2.5% for the week. The ETF that looks at tech software sector is up 2.25% for the week. So I'd say they've kind of rebounded a little bit this week.
Weathered the storm might be the proper term. I'm glad to see that category at least firming up a little bit. Resetting the table, another nice up day yesterday. It wasn't monster ups, but it was enough to set new records on 2 indexes and give the Dow a pretty nice positive bump for the week. 45 minutes before we open on a Friday, what are we looking at?
A lot of green ink, Dave. We got the Dow, like you said, it'd only take a couple of days at this rate, up almost 1.2% today, $565 right now on the futures. S&P 500 is up almost 0.8%. The NASDAQ 100 is up almost 0.9%. The Russell 2000 up almost 1.5%. Big moves there. On the other side, we got silver making a huge jump today, Dave. 3.5% up, $81.44 an ounce. Gold up a little over 1.1. Crude oil falling like a rock, down 9.8%. This is the May number, down to $85.41 a barrel. So, yeah, you got to like that, right?
And you were mentioning before we went on the air that a couple of our sources are now quoting the out-month futures, and a couple of months down the road, they actually expect it to be even lower now.
Actually, you know what? The number I just quoted was probably the June number. The May number, not so good. It's down. It's at like $90 a barrel, but that's still down almost 5%.
Oh, yeah, we'll take that happily. About the only red mark I got anywhere elsewhere in the world is going to be the Asian Rim. I've got to assume it's because with us blockading the Iranian ports, that's one of their primary supplies of oil. Asian Rim markets generally down. The mainland Chinese markets off by a little bit. The rest of the markets in the Asian Rim off by, well, upwards of 1% in some cases. Europe, on the other hand, they're generally pretty happy. The average European index trading upward by about 0.4% halfway through their trading day. So they're looking at us and saying, okay, the 500-pound gorilla has its poop in the group. Let's buy something. That seems to be the case over there anyway. Getting my retirement together off of all this data really takes more than just looking at it day by day. I need a plan. How do I find you to get that plan, Philip?
Dave, it is important to have a plan because that makes retirement so much better. Give us a call at 863-382-0037 to schedule your core retirement review where we'll look to see where you are and see if you're on the right track and if you need to tweak a few things here and there. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com. And by the by, we've been doing a lot of your stuff on both frequencies lately because we got a new sports talk station coming after the weekend. So you might be on 106.3 as well.
All over the place.
Yep. 106.3, The Streak is on the way right here. You and I talk to you next week, all right?
All right, but have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
So good to see you. Glad you're here. I hope you'll join me again next week as we talk about what's happening out there in the economic world. Thanks for joining us today. Until then, have a great day.